Morning, everyone, and happy Memorial Day weekend. It's Friday, and everybody appears to be golfing already. So I'm doing something wrong in life, I guess. Just kidding, just kidding. So what I want to talk about today, I've had a few interesting experiences this week, and I want to talk about something. I want to talk about one. How do you even know you can trust me versus someone else? I had an experience this week that was really something. These guys had a great pitch, walked me through chart setups and everything, and it looked right, and he was giving the right answers, and everything sounded good. And then I joined him for one of his training classes. He clearly did not know how to use his own system. He was guessing his way through it. And I realized something as I reflected, and that was real simple, that he had just he recorded some market data. He pulled up some chart, recorded some market data, and he basically just memorized what was going from where to where and how it was going there. And so when he was talking with me, that it was just, he just memorized where price was going. Now, I got every answer right every day. He would say, "Do you think you would go long or short here?" And I would just tell him, I go, "Well, you're going there, you're going short." This, without, and his partner at one point lost it and said, "Holy shit, this guy knows what he's talking about." And I thought, that's odd. What, why would you be surprised? Because I have a lot of video up of me. The difference is I'm not memorizing anything. I record this stuff real time. The only reason I record and then show it live is because I can't record an actual live. I can't screen share with you. I can't show you a chart. I can't record live. It's the only reason I record. I don't change anything. I don't delete anything. But it made me think, because sometimes I wonder, if you watch this even once, how could you pass? How could you then go on to an advisor that's going to give you some asset allocation model and pay tens of thousands of dollars more? And I was a wealth advisor for 17 years. I know what I'm talking about. For poor investment performance and something I could teach a fifth grader in 10 minutes. It makes no sense to me. Now, there are advisors out there that, like me, I was the black sheep everywhere I worked. I always did what I'm showing you now. I'm talking as a whole. There are guys out there that are really, really good at what they do, but still, most of them, and I would say most of the world, to be perfectly honest with you, is just not on my level. I've been doing this for 25 years, and I am a real master. And what makes you a real master is the ability to see things that others don't see, even when you're showing it to them. To you, it's so blindingly obvious because you've been, like, for me, for example, I've been doing this for 20 years with screen time averaging 60 hours a week in front of this screen, looking at charts, doing this. And in fact, when I first got started, it was much more, 120 hours a week, 100%. I worked through programs every day for I don't even know, 10 hours a day, that you could say whether you would buy, sell, or stay neutral. And you would click through each bar. So whether they were daily bars, weekly bars, minute bars, 5-minute bars. And I must have done that three to 4 years, at least 8 hours a day, at least 5 days a week. And that is no hype. That is no BS. That is why I do and can do what I do. And that's why my system is set up to educate you and then have you follow me, because I cannot have you see through my lens in a 6-week course. But what I can do is help you to understand and have the confidence in my weekly updates, because you'll go, "Oh, I see that now. Oh, there it is. Yeah. Okay. All right." And so once you have that confidence, you won't make mistakes that the average person makes. And the biggest mistake the average person makes is an emotional reaction to what they're being fed. So this last bear market we just went through, for any that don't know, a bear market just references falling prices. We actually hit the bottom the day they announced that Russia invaded Ukraine. I went on live like this, like I always do, and I said, buy everything. We're there. Okay. Now, do I always pick the exact day? Not always. I mean, in 2009, I did. That was easy to see. This last one was easy to see, but it doesn't matter because my risk management, my cash management, and my investment management protect me from needing to know exactly when the bottom is. I don't need to know. I'm scaling in and out of positions. I'm a professional. I don't miss. Okay. When I say I don't miss, it doesn't mean I'm never wrong, but I am rarely wrong. I will tell you that right now. I say that with full confidence. I say that telling you that when you take my VIP mentorship course, if you are dissatisfied, if it didn't rock your world, money back. Take it. Take it. Take your money back. It's no problem. I don't care. Save this recording for life. I've never returned anyone's money. Never. Let me say it again. I have never returned anyone's money. No one has ever, let me say that a different way because there's so many salesmen and pitchmen. I've never been asked for money back. I have never been asked to get their money back. I have never been told they were dissatisfied, and any student or client of mine was dissatisfied. When I was a wealth manager, I stopped that piece of my life after 17 years. I still have my very first client. That is not because I'm good at putting out fires when markets drop. It's because I'm not involved when markets drop. And I know that this seems like a pitch, but here's the thing. I don't know how else to do this. I show charts. I show you the fundamentals. I explain how I got here to here. And it feels like, and I know that when you're trying to start something new and you're in an arena where there's a lot of con men, it's going to take time. I accept that. I completely accept that. No, it's not a problem. It's no problem. I realized after I never do this. I actually did it for market research. After talking with those two gentlemen, I realized why it is more difficult than I had ever anticipated to do something like this. Because believe it or not, I am not doing this entirely for money. I have to support my life, right? That everybody has to work in order to live. But this isn't all about, mansions and yachts. It is not. I could make far more money managing money. Far more money managing money. I am doing this because I want to change the system. I want to change the system from a system that has this large group of people completely unaware, and believe me, completely unaware of how this all works. You're looking at media, you're reciting news. What do you care about the news that comes out today? The stock market is a forecasting mechanism that has priced in whatever is going on now 6 months ago. How can that be, Derek? How can that be? Because price is irrelevant to news, to specific news. The market is a forecaster on notional results, the overwhelming results. So what does notional mean? Simple. This simply means that in 2021, when the U.S. decided to insert 50% more currency into circulation, everyone that took Econ 101 knew the notional result was massive inflation. They don't need to know the numbers. No one does. That was the easiest thing to know in the world. What's that mean? Interest rates rising, mortgages more expensive, real estate gets hit, the stock market will take off. Why? Because we pushed 50% more currency into the market. If you're making $10,000 a month and all of a sudden I up it to $20,000 a month, can you buy more or less? Are you going to buy more? We're a consumer-driven society, folks. It's not a trick question. Yes, you're buying more. Yes, you'll accept higher prices. Yes, you'll bid up the ask if you really want something. That's the stock market. That's how easy it was to know. There it is. So all this stuff in the middle is stuff in the middle. And what you need to know about how that inflation is going to end is just look at a few points in history. What has the Fed done before? Well, they blew it in 1929, 1930, but you could also argue that it was blown on purpose. I could easily argue that. In the 70s, how did they do? Okay, but they let inflation get out of control. It went hyper. They know how to protect from that, and they're doing that right now, which means the most likely result is going to be a hybrid of those two things. From the crash of 29, it took to 1948 to break even. That's 19 years. In the 70s, they allowed hyperinflation to get out of control for about 3 years, 4 years, 3 years, something like that. What was the recovery time there? The recovery time there was like 6 years so that they could fix that. Grab the middle. They're going to grab the middle. So you're probably looking at a bouncing interest rate market for a decade. Notional. I don't need to know all the numbers. You screwed it up here, which drug things on forever. You did pretty good here, right? You did all right. You dropped rates. You rescued the economy in the 70s, but you left them there too long. You increased currency in circulation. How? You went off the gold standard, which took our currency into a fiat status. What does fiat mean? It simply means it's a currency based on nothing. It was based on the value of gold. Took it away. We made it fiat. So what happened when we made it fiat? We could make as much of it as we wanted. With gold, we couldn't do that. What did we just do in 2021, folks? We pushed a ton of fiat currency into the market. Doesn't even matter that it's 50% more in circulation, although that number blows my mind. But the fact of the matter is that's what we did. So grab the middle, a decade, interest rates going up and down, bouncing. We're going to go through inflationary, and then the environment's just going to bounce from higher rates, and then they'll pull them down, and then they'll probably have to jack them up, and then they'll pull them down. Probably what we're looking at. Does that even matter to me? Well, if I'm evaluating real estate, it does. So for all of you folks in real estate out there, this is one of the reasons that some of my students are not just real estate agents, but mortgage brokers, anything to do with real estate. And here's why. Because with what I do, you can take it to any market. Why? Because I'm actually a master. I can carry across markets what I do. If I want to go into currency, I can. If I want to go into stocks, fine. Metals, fine. Commodities, fine. Now, is this cocky? Is that and that's the way a lot of guys would tell you, oh, no, you have to be very specific. I only trade the S&P futures because that's all I understand. Because you understand rules and boundaries. You stay within those rules and boundaries, and you grind, and you're living in the moment, right? I don't do that because I understand how the overall system works, and the intricacies involved are really based on time frame, not what you're looking at. The time frame you're looking at creates massive adjustments. So if somebody tells me I'm a much better day trader than I am a swing trader, there's validity to that, okay? Because if you don't know how to adjust your risk management, cash management, and investment management based on your activity level and the time frame you're looking at, you're going to get waxed. Bye-bye money. Do not want to do that. But if you just want to look at different asset classes, if you don't know how to do that, it's because you're a one-trick pony. And that's not a problem. Maybe you do make good money at this one trick. But you and I are very, very different. I took the time. I mean, I don't even know how many thousands of hours. What do they say? 10,000 hours makes you a master. I'm so far over 10,000. 10,000 hours isn't a dot in my rearview mirror. Now, I'm saying all this, and guess what? You know how many guys have clicked off this video? I'm out of here. Forget this. I'm gone. I'm not listening to this. This guy's an all ego here. I know what I'm doing. I know what I'm talking about. I work for blah, blah, blah. He's in a chair by his pool, which is a rental. Right. And this is precisely why I believe women are going to be the future of investing and trading, because the truth is what's been hidden from everyone and what is never talked about is the fact that the real driver of the market, and you'll hear me talk about activity, cash flow, and emotions, right? So activity, the amount of trades taking place, cash flow, the amount of money being moved, that's the mechanics. That's the actual mechanics that will elicit the emotional response that actually, drives a market. Plain and simple. It's emotions. The higher your market EQ, the better investor and trader you will be. And women have a higher EQ than men in general. And there's a very simple reason why. Is because women, at least from my era, I'm 45 years old, right? So I'm like, to some an old guy, to some a young guy. I don't know what I am, whatever. I don't really care about age. But from my era, men were not allowed to show emotion. And what that does is it suppresses it to a level where you don't even know how to express it anymore. It's not that you don't want to, you don't know how to. And then you're taught to live through ego, which is a massive problem. Okay. Whereas women are allowed to express their emotions. They are respected for expressing their emotions. And they, men will use fighting. So you could say things to me, whatever you wanted. I can't stop your words, but I could break your nose. And at least rum raise, that was fine. So you had to watch. If you're gonna run your mouth, someone's gonna check you. And I happen to be a high school wrestler that I never lost a section match in 4 years. That's right. I would have been one of the great ones. Al Bundy there. I thought it'd be humorous. But that is true. So yeah, I had no problem getting physical. So I didn't have a lot of problems with someone, doing that with me. Whereas women, it has been traditionally very unacceptable for a long time. And what that creates is, well, you have to attack somebody if they're attacking you. So they would attack each other's emotions and basically just, fuck with each other for lack of a better word. And so I believe that right there, that can change. I mean, that can change. However, I don't know that it should. I really do not. But I'm not even debating that, nor do I care. It's just a personal opinion. But that makes me believe that women should really be the drivers of the investing and trading world because they know how to drop the ego. They do. And they're really looking for the smartest guy. They do their research. And that's one of the things that probably holds them back just a bit from jumping in and working with somebody. Whereas a guy, if he just, for whatever reason, it clicks, hey, this guy does know more than me. You have to watch how you present to men. You're always having to tiptoe around their ego because it's so gentle. But if they make up their mind, they move very, very quickly. Women tend to move a bit slower. And I think in that process, because of that process, there's just so underserved in the investing and trading world. They are, as investors, they're so underserved. Even in the stuff I put out, which is literally based on EQ mastery, EQ market mastery, because that is what it's all about. That's what it's all about. If you know how to identify areas where emotions are being manipulated, then you know how to play the market every day, all day, and you can forecast from anywhere. If you're trying to read bars like this, those two pros were showing me, see, this is a green bar. And on this red bar here, I'm going, oh my God, meaningless. But they don't even know that. So the problem is when you sit in front of someone who is a master and you are a novice faking it, it is just like bing, 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 but not to the average person. They wouldn't have been. They would have been tricky. So what I want to show you today, and I went on much, much longer than I planned on. I don't know where the recording is. It's tough. I'm trying to do the light and I'm trying to look at a screen because that's how I'm recording myself. So I don't know the time. Oh, there we are. Wow. Already at 19 minutes. This is going to be a long one today. I'll actually try to hurry through the rest. So the point is, when you have a master in front of you, you may not be able to ever do what he can do because most people can't do what he can do. I've met masters in my life in martial arts, and believe me, I'll never be able to do what they can do. And I am a very, very, very high level wrestler. I'm pretty good at jiu-jitsu, train Muay Thai, boxing. I've met masters and I just don't compare, and I know it. The difference between a master and someone who's great is the entire world. Someone who is great and willing to do what it takes to drive business, which means, it's not for me. I don't put on a persona. This is who I am 100 day, 24 hours a day, 365 days a year. This is me, right? They put on a persona. They do their thing. They will, if the AI train's taken off, they ride it. I don't do that, right? I'm warning everybody right now. And I'm going to show you why right now. So let's get into why. So what I'm going to show you is just a couple of videos that I just made. So I was talking about GameStop and AMC. And with GameStop, I literally told live 4 days ago before earnings. I think it was Tuesday, I believe was earnings. I literally, the day before earnings, broke down GameStop, what would happen, how it would happen, and why. And this is a meme stock. It's very, very difficult to do this with pieces of crap. Meme stocks. Very difficult. However, you can do it. You have to be doing this for a long time. You have to have a high level of confidence, but you can do it. And I'm going to show you that right now. So this video is, I think, 3 minutes long. I'm going to share it with you. This is from 4 days ago. Sorry, I'm leaning into this screen so much, but I cannot see because the light's in my eyes and I'm looking at a screen. Here, let me do this. All right, not that one. Apologies. Let's see. Where is this thing? Goodness. All right, so how do I do this? Sorry, I'm trying to show you something from there it is. Okay, here we go. And I'm gonna leave all this blundering up because I actually want you to see it. So here we go. So this is 2 minutes, 30 seconds of the GameStop. I know people will get bored very quickly. So let me pull it up. Had a funny feeling we would find this. What do we use to manipulate people, folks? What do we talk about? This is GameStop. What do we talk about all the time? We talk about gaps. And why do we gap price, everybody? We gap price because it creates huge price movements from the open to the close, typically. From the close to the open. Or people wake up to an 8% up day, and that's the way prices should move. However, from when a market closes and it opens at a new higher price, that just generates a lot of excitement. That is exactly what we see here. So what are these two areas? What are they, everybody? Giant gaps. What's interesting about these giant gaps is that one has already filled. Look at price. When you fill a gap, all that means is price comes back down to where that big hole was. Filled. So if you have a gap from $10 to $20 and it fills, that means price came back down to 10. In companies like this, I'm going to call this a meme stock, and things that act so erratically, typically no. But I'm going to go ahead and think that, yeah, they probably are, because this is the first trip they're taking with this stock. So that's me saying that first gap will fill, which is at $17.50. Make as much money as they can and get out of the way. It filled today. Okay, so what have we learned? We have learned that technical analysis, aka the story of the stock market, using supply and demand and cash flow, is the ultimate driver of price, not a company's earnings. We have learned what trend following is. So trend following is nothing more than lots of people piling on to something, typically in an irrational behavior. The prices are going up, so they pile on. That's following the trend. I think that's enough. Let me turn that off. Yeah, that's good on that video. So I wanted to show you that because that's 4 days ago, and I'm showing you exactly where price was going to go. There's not just one of those, by the way. I have hundreds of those, and I delete nothing. So what I want to show you now is there's all this talk about NVIDIA. And I've tried to explain to you that markets act irrationally and they act on emotion, and that they're pretty easy to understand. So let me just give you one sentence, then I'm going to jump over. I'm going to share something else with you. When a stock's price goes parabolic straight up, it will do the same thing every time. It will come back down to wherever that base was. So wherever it took off from, it'll come back down. Usually emotions will be so destroyed at that point that it'll sink another 10, 20%. And sometimes companies are accidentally killed with this type of price move because people are so upset and so depressed, they'll never buy it again. This happens. That was the real fear, by the way, in 2008, 2009. What the professionals realized was they got too greedy. They did. They knew it. They were afraid none of you would ever invest again. That's why crypto started. For all of you that wonder why crypto exists, it's not for a currency. It exists because they were afraid you were never going to invest in stocks again, and they started up a new market. Much like what happened after the Roaring 20s. And I can give you that history story another time, but I want to finish this up in under 30 minutes, which, as you can see, is difficult for me. I could sit here and talk for the next 8 hours. And if one person was listening that cared, I'd happily do it. Okay, so we're going to go back here, and I'm going to show you NVIDIA's future. All right, let's look at, that's my wife, everybody. Say hello, Marnie. It's Mother's Day. Okay, are you ready to see what NVIDIA's future looks like? This is me warning everyone about Tesla actually, this one is me explaining how I knew and why I was right and what has actually happened with price, but it doesn't matter. This is NVIDIA, folks. You ready to see the future?
Tesla gained 2,300% in market price from 2019 to 2021. It subsequently lost 75% of its value from the end of 2021 to January of 2023. This is what it looks like in a speculative market. If you're looking for guidance, visit PrometheanInvesting.com, take one of our 2 courses, or reach out to me for our VIP mentorship program starting in May.
All right. Did everybody hear that? That is the future of NVIDIA. Let's watch it one more time so you know exactly what NVIDIA is going to look like.
Tesla gained 2,300% in market price from 2019 to 2021. It subsequently lost 75% of its value from the end of 2021 to January of 2023. This is what it looks like in a speculative market. If you're looking for guidance, visit PrometheanInvesting.com, take one of our 2 courses, or reach out to me for our VIP mentorship program starting in May.
Okay, so for those of you that say you would have known that, no, you wouldn't have. No, you wouldn't have. No, they didn't. No one talked about it. Why not? It's not talked about, and analysts will work against you. And this is what I mean by analysts working against you. Let me see if I can find it here. This will be, gosh, I have a minute and a half. This is Peloton. Peloton fell from $100+ down to $27 in 1 year, okay? After the craze. That's 83% that stock fell. 31 analysts on Wall Street rated it a buy at $27. Why? Because they needed you to buy it so they could keep selling it because they bought it way down at $2. I put a post up on that very day, and I was talking about it yesterday, so I know what the date is. It's February 7th, 2022, mocking those analysts, saying that this thing was going down to 3. Guess where it trades right now? About 350. Let me see if I can find it real quickly, and then I'm going to sign off. I want you to see what I'm telling you is accurate. That it's that simple. All right, let's do this. Share. And I'm sharing myself because I want to go to this. I was just talking about it. This is my Twitter feed, but I may have done it in a comment to someone else. And I have to be honest with you, I am not great at knowing how to find this stuff on here. I don't know how to find the comment. I can pull up the Peloton for you, though. That was another one that was very easy to call. And every analyst on Wall Street was all about Peloton. 33 of them. Going to the moon. Down to 350 from 27. You know what that does to somebody's life savings?